Welcome to Business Middle East, in which we look back at the major events affecting the global financial markets in 2014. It was a difficult year for many, but there are some positive elements moving forward and a long wish list for the upcoming year. To discuss this, we are joined as usual by Nour Eldeen Al-Hammoury, the Chief Market Strategist at ADE Securities in Abu Dhabi. Welcome, Nour. So here we are at the end of 2014. The financial markets saw a lot of action that certainly kept you occupied. It was a quite busy year for all analysts, was it not?
Well, Daleen, that's right. It was a year of big changes. I think we saw a lot of major events in the financial markets and the global economy. This includes, of course, in the U.S., Asia, and the Middle East, and also saw some significant changes in Europe and Russia. So basically, you're right, true. We were occupied in our offices trying to understand the fundamentals that we've seen across the year.
As we saw, Nour, the U.S. stimulus packages helped the markets perform better than expected. Could we see the Federal Reserve raise interest rates in 2015?
Well, in a short period of time, everything has changed dramatically due to falling oil prices. So basically, right now, the estimates for a sooner rate hike by the Federal Reserve became very low. Furthermore, don't forget that there are some negative figures began to show up, such in the U.S. at least, such as the PPI or the Producer Price Index, the factory orders in addition to the slowing down in the housing market. So therefore, we believe that the Federal Reserve might not be able to raise the interest rates sooner in 2015.
In Asia, China's economic growth slowed and Japan's fight against recession flagged. What are the prospects for the region next year?
The main focus right now in China, or the main concern, will be over the credit market, which reached alarming levels. And we will be watching what the People's Bank of China will do over the next few months. So if we switch for Japan, we believe that the Japanese economy will likely or will remain in a recession over the next year, as we believe that the Prime Minister policies, or what's so known as Abenomics, will deepen the recession more than it will help the economy.
It's certainly been a stressful year for Europe. Do you think the ECB will take effective action next year, and how bad can things get for Russia?
Well, they must take an action very soon. The economic situation has deteriorated significantly in the past few months. This is despite the ECB recent decisions. Furthermore, don't forget also that declining oil prices right now will put a greater pressure or downward pressure on inflation, and Europe might suffer from deflation very soon. If we switch to Russia, things might get even worse, as again, declining oil prices are affecting Russia directly. This is aside of the effects also of the Western sanctions and the crash in the Russian ruble. So basically, we have to keep in mind that also this is not only in Russia, it is also here in the Middle East.
Okay, let's have a look at Middle Eastern markets, and we'll continue our discussion with you, Nour, after the review. It's a pretty decent year for markets and investments up until the last quarter. Let's now look at why.
The Middle East began the year in an encouraging way. Saudi Arabia's index soared by 30% before losing those gains and turning negative as the year's end approached. However, there are big changes ahead, with international investors being welcomed. The plan is to open the Riyadh stock market to them for the first time in early 2015. Investors' confidence is on the rise, and more liquidity is coming from foreign and Gulf region investors as well as local business. Dubai's financial market general index was among the world's best performers, jumping more than 64% early on in the year, although by the beginning of December things had cooled significantly. Same picture for Abu Dhabi, which at one stage was up by more than 25% before easing to gains of a modest level. In Egypt, the EGX 30 index added more than 45% over the year as the political situation there began to stabilise. Two factors created market volatility. Geopolitical tensions in Libya, Syria and Iraq led to concerns of a regional war involving ISIL, and slumping oil prices hit major company shares, reversing the year's gains. The dramatic fall in the cost of crude fueled fears of slowing economies.
Well, bearing in mind both geopolitical events and the sharp decline in oil prices, what's your assessment of the downside risks to the markets next year?
The region's reserves for now and the potentials are likely to keep the region attractive to some investors. But however, the Middle East markets were one of the best performing markets in 2014, but of course they are not anymore right now. But at the same time, we believe that the decline could be limited, as the history also showed before, despite the fact of the current geopolitical tensions, which also had only limited effect on the region and on the market here in the Middle East.
Based on the financial data that you have, what is the investment forecast for the Gulf countries in 2015?
The first opportunity that we have right now is basically it's going to be in Saudi Arabia and the UAE. In Saudi Arabia basically is opening the door for foreign investors at the start of next year. The estimates are quite very high in terms of the liquidity that will be injected in the markets. If we go to the UAE, everyone knows right now that the UAE will be hosting the Expo in 2020, so there are a lot of potentials. There's a lot of work to be done very soon ahead of this notable event.
Thanks, Nour, for being with us for the Business Middle East review of 2014.
It was a pleasure being on your show, and thank you always for having me.
That ends our program. Don't forget, you can catch all previous episodes on the Euronews Business YouTube channel. From Business Middle East, we wish you happy holidays and we'll see you next year. Thanks for watching.